Now we get to talk about financial statements. Financial statements. And there are three main financial statements that you have to concern yourself with in accounting. You can't run away from them. All right, the first one is the balance sheet. To start, I need you to think of the balance sheet as your responsible mother coming in from time to time to check up on things. She's only concerned with where the business stands right now. At this very point, when she walks in and she looks around on, let's say for our example, December 1st, what is the condition of the business? What do you have? How much of what you have do you actually own? And how much do you owe for it? She's very concerned about you. At any point, she could pop right in and she's going to take a look at everything and say, what do you have? How much do you owe for what you have? And how much of it do you actually own? And then the next is the income statement. All right, that actually is over a period of time. And all you're worried about for the income statement, simple. How much money are we bringing in? And how much money do we have to pay to sustain the fact that we're bringing in money? So it's all about revenues over expenses. If the revenues are more than the expenses, you have made a net income that's positive. That's a profit. The bottom line, your net income, that very last line on the income statement, that's where it comes from, the word bottom line. You hope it's a profit. If your income statement shows that your expenses, how much you're paying to sustain yourself, is more than how much you're bringing in from customers, then you are operating at a loss. So that's your income statement. It's very important that we get the three down. And then the last financial statement that we're very, very interested in is the statement of cash flows. Anyone that wants to lean towards finance or just understanding really the health of a company, in school, you're going to focus a lot on the balance sheet and the income statement, and the statement of cash flows is going to sort of be an afterthought. The professor's going to test you on it, but you're not going to find a lot of conversations in most schools about the statement of cash flows. And in my opinion, it is the most important because we say cash is king, and this measures where your cash is going. Where are you bleeding money from? And if you're getting money, where is it coming from? Is it coming from your financing, from your investing, or from your operations? All right. So these are the three that we have to remember. And again, these two, income statement, statement of cash flows, measure over a period, while the balance sheet is going to be at certain points. So usually the beginning of a period and the end of a period. Beginning of a period and the end of a period. And in the middle, the story that your accounting is going to tell is going to be mainly about what the income statement says, how much money we're able to bring in if we did a good job, and where was a lot of cash going. So just to sort of reiterate and show you what it looks like, December 1st to December 31st. The beginning of our period, December 1st, and the end of our period, December 31st. That's what that green arrow shows. We'll go forward in time. So at the very beginning of the period, again, for a balance sheet, just try and think you have to balance, So usually a seesaw would have to balance on a point. So it's measuring the status or condition of a company at a certain point. So we're just going to have here balance sheet. And I will describe in further detail exactly what goes into a balance sheet. For right now, we're just going to write assets, liabilities, and equity. It does not hurt to sort of start actually putting that in our minds. This is the beginning of it. Your accounting journey is starting. It starts with the balance sheet in this case, all right? You have to gauge where you are in the beginning. And then when you go on your journey, you're going to have your income statement. So going forward in time from the beginning all the way to the end, what's going to help us realize if we have a profit or a loss is our income statement. And again, we're going to dive more into it, but for right now, we just want to get an idea because I don't want you to confuse the fact that the balance sheet starts at a point. It measures and gauges the health of your company or just the status of your company at a particular point. Very important to remember that. So at the beginning, we're going to start. We hope through the period, we're able to recognize a profit. So we're just going to underline that at the very end. So we want to see a profit at the end of the period. And then after that, we're going to take a look at our balance sheet again. So after making all that money, what does the company look like again? Okay, so that's two of our financial statements, the balance sheet and the income statement. So remember, I can't emphasize enough, the balance sheet is just like your mother popping in every now and then just to check, hey, I don't know what's going on, I don't understand your job, I don't understand this business, but I understand that you need to be running a sensible business. That's how I raised you. You are a smart individual. You're not going to let me down. So let me take a look at this very moment. What is the condition of your company? And then she's going to put together a balance sheet for you. So if you have to remember it somehow, just think balance. Seesaw has to balance on a point. All right, it's all about that right there, the point, balance. And now the other thing that's actually you're going to be recording is the cash flows, the statement of cash flows, kind of like the stepchild of financial statements. But if you really want to know what's going on in the company, because the company can make all the profit it wants, but if it has no cash to show for it, and you have to start selling things off just to get some cash, it's just it might not be as healthy as you think it is. So we have a statement of cash flows, and again, that's going to be over a certain period. All right, and that's it. Statement of cash flows over a certain period, the income statement over a certain period, and do not limit yourself. The period doesn't have to just be for 1 month. It could be for a quarter, it could be biannually, it could be annually, but just understand that accounting tells us a story. The start of the story and the end of the story is going to be represented with the balance sheet. And throughout the story, throughout the period, we're going to be looking at the income statement to see if we have a profit or if we have a loss. And the statement of cash flows is really just about the movement of cash. That's it. Just the movement of cash. Are we bringing cash in or are we losing cash? Because at the end of the day, cash is king. And that's it. The three you have to remember: the balance sheet, the point, statement of cash flows. Are we bringing cash in or are we losing cash over the period? And the income statement. Do we make a profit or do we make a loss throughout the